Be Wealthy and Smart, episode 351.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about 6 reasons why millionaires chose their financial advisors. And you're going to learn what those 6 things are that are important to millionaires, and also the 6 reasons why millionaires might consider changing their financial advisors. This comes to us from Investors Business Daily, December 11th, 2017. And it says, landing, keeping millionaire clients. Millionaires tend to rank honesty and trustworthiness higher than investment record in explaining why they chose an advisor. Lax communication outranks weak investment performance among reasons why millionaires change advisors. And it lists the source as the Spectrum Group, which I'm aware of does a lot of surveys with the financial industry and why people do the things they do. So there's a couple of bar charts here. One bar chart, it says reasons why millionaires chose their financial advisors, and then the other one says reasons why millionaires would change financial advisors. So first we'll deal with reasons why millionaires chose their financial advisors. And the very number one reason, just think about you're a millionaire, you're going to choose a financial advisor. What do you think is most important to you? What pops into your head first? Well, the reality is 31% said they chose their financial advisor because they seem to be honest and trustworthy. So it has to be with someone that they really can trust, and that happened to be far and above the most important factor. The second most important factor at 18% was their investment record. So they weren't judging them by how great of an investor they are. That might have been what popped into your head first, but it was really trust. And secondly was their investment record, or how good they are with managing money. Number 3 is strong referral, and that was 14%. So a lot of studies have shown that millionaires get their financial advisors from a referral from another friend, and that is the most effective way that they find a financial advisor. It's the most common practice, I should say. And so for them to say 14% was due to a strong referral, I'm kind of surprised it's that low. I would think it would be higher, but anyway, it was only 14%. The next reason is acceptable fees/commissions at 13%. So again, it might have popped into your head that they had low fees. That might have been your number one thought, because a lot of people talk to me about fees and seem to have fees on the brain, that they're the most important thing. And I always say, the fees are not the most important thing. They are a factor, they are something to consider, but they're not the most important thing. And this, in fact, shows research that most millionaires agree with that. So it wasn't about the fees, only 13% due to the fees and commissions. The fifth factor was they were affiliated with a well-known firm, and that was 11%. So a brand that they know and trust, a brand that's maybe been around for a long time. It's not fly-by-night. They, again, are wanting to safekeep their money, want to make sure it's not going to disappear. And so 11% went with a well-known firm. And finally, 5% said offers variety of products as the reason they went with a particular financial advisor. And that makes sense to me too for a very small amount, because there are a small amount of investors, millionaire investors, who want to trade a little bit outside of the box. And so someone that they choose might be able to do that kind of trading for them versus someone who doesn't do that kind of business. For example, not all financial advisors even trade with options anymore. Most don't. But when I started in the business, it was something just about every financial advisor did. Of course, they were more stockbrokers back then. They were more buying individual stocks, building positions for clients, and it was a much different form of money management. Around the year 2000, money management really changed and it became fee-based instead of commission-based. And so that meant that you were charged a fee based on your assets under management, and the advisors tended to move more toward professional managers managing the money, and they would become asset gatherers. They would go out and find new clients, new assets to put under fee, and let the other professionals manage the money rather than using their time to actually manage the money, as happened back in the day. So I can see where things have changed, and some advisors don't even do some different kinds of investments that used to be routine. And again, I can see why maybe a small percent would go with an advisor for that reason. All right, now let's talk about the reasons that millionaires would change financial advisors. So what do you think would make a millionaire unhappy enough to want to change a financial advisor? What would that advisor do wrong? So think of what your number one reason is that you think a millionaire would do that, and then we'll look at what the facts tell us. Well, 55% said they would leave or change a financial advisor if they were not returning their phone calls promptly. Now that is super important because you might have thought it was due to performance or something else. But the reality is when they want to talk to their advisor, they want their advisor available. And that was very important to them, and a huge number, 55%. That's the biggest number in this whole survey. So that in and of itself is just telling you that when millionaires want to talk to you, they want their financial advisor to call them back right away. It's super important. The second reason why millionaires would change financial advisors is not providing good ideas or advice, and that was 45%. So if they felt like, I'm just not getting good advice from this person, they're telling me, this or that, and I don't agree with it, that would cause them to want to change financial advisors. Number 3, not contacting me proactively, and that was 44%. If something changes and the advisor isn't being proactive to call the client, that is definitely something that they would change advisors for. The fourth thing is not returning emails promptly, 42%. So 55% didn't like it if they didn't return their phone calls promptly, 42% if they didn't return their emails promptly. So you get a little more slack on returning the email, but you still have to be prompt returning the emails and getting back to the client, or they might consider changing financial advisors. Number 5 was investment underperformance. That was 32%. So only 1 in 3 are actually going to leave the financial advisor if they feel they have underperformance, which is really interesting because that might have been, again, one that you may have thought was the most important thing to a millionaire, but it isn't. So just something to note. And finally, 29% said they would change financial advisors if there was a misunderstanding with their risk tolerance. So if the advisor was giving something too risky or something that didn't take enough risk, that didn't match up with the client's actual risk profile, then they would consider leaving their financial advisor. So just in a quick review, again, we had 6 reasons why millionaires chose their financial advisors and 6 reasons why they would change financial advisors. And overwhelmingly, they would choose their financial advisor due to honesty and trustworthiness, and they would leave their financial advisor mainly for not returning their phone calls promptly. So those are the 2 main things we learned from this article. I think this was really helpful. It might have illuminated some things for you just to show you how millionaires think. That's part of what I always want to provide for you on the podcast because you need to align yourself with millionaires. You need to be thinking the way they're thinking, and millionaire mindset is part of what we talk about here. So I want you to start thinking about things in the way that millionaires think about things. And it just goes to show you that our natural inclination might be something more price sensitive or something more performance oriented, but that's not how millionaires think. So I thought those were very interesting statistics. I'm going to post this article and these bar charts over on my website at Linda P. Jones. And while you're there, if you want to pick up my 11 quick financial tips to boost your wealth, there are 11 quick things anyone can do to get your wealth building moving faster. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.